Hey, what's going on, team? It's Ricky with Techbuds Solutions. Thank you guys again for your time this Sunday. This Sunday Stock Talk is something that we do on a regular basis. It's pretty much to get us back on track and make sure that we're very micro-focused on the top stocks that our overall group sees value. And I want to make sure that you understand that none of these stocks are in any way any stock suggestions. You should never trade based off of other people's opinion, but this is where we come together as a team, as a Techbuds and Learn Plan Profit team, and we break down the top stocks that you see value in. So if you tune in during this live stream, you should be able to see the kind of chat that we have going on right on over here. So if you guys ever want to tune into one of these live streams and have me break down your top stock, we do this every single Sunday at 6:30 p.m. as of right now due to daylight savings Pacific Standard Time, but I'm in Arizona, so that's usually Mountain Standard Time. So let's go ahead and have some fun. If you guys didn't watch the recap of last week, I made a little bit over $18,300 profit. Feel free to go to all of my recap videos. I recap every single day. I show my overall profits, or if it ends up being a loss. So feel free to check that out. Had an amazing time with the Learn Plan Profit team. And before we move on forward, wanted to say happy Father's Day and to all the father figures out there as well. We are running the biggest Learn Plan Profit sale today, and it's only exclusive as of right now on Instagram, on YouTube. So it's during this Sunday Stock Talk. We have not promoted it in any other platform. So we're going to offer it for the first 20 people. Whenever you're ready, it's going to be $76 off, and it's Father's Day, if I'm not mistaken, Father's Day 2 or Father's 2. But again, all you have to do is click, if I'm not mistaken, the second or third link in the description. We have the Learn Plan Profit link, and then right below that, it has the $76 off whenever you feel ready. If you'd like to watch me trade live, if you want a complete A to Z video lesson library for a lifetime access and a private group chat where you can work with me on a closer basis, it's not a monthly fee, it's not a yearly fee, it's a one-time fee, and you get to watch me trade live literally every single day, Monday through Friday, which is something that I personally exclusively do only for the Learn Plan Profit team. So let's go ahead and I'm going to start sharing my screen. It's time to have some fun and start breaking down some stocks. So I hope that you guys have your top stocks ready in that ticker call out format. So that's pretty much all I'm going to ask from you is to, if you do want me to break down your stock, just like you see John Peters on the right hand side, and then Ishmael is also going to be posting the ticker call out format. I just want to make sure, and the reason that I asked this from you is I want to make sure that I empower you to do your own due diligence. It's kind of like, are you always going to have someone to, maybe give you, are you always going to have someone to, ask for maybe a piece of advice before you buy or sell something? And that's not always going to be the case. So I want to make sure that you're practicing and you're doing your own due diligence on a regular basis before you hear anyone out on maybe what they think about that potential, trade, or before that potential investment. One of the biggest pieces of advice that I can give you is formulate your own criteria and formulate your own opinion and your own eye for value before asking other people what they think, right? Because when you hear a kid, right, and they might ask their parents what they think about a specific car or, a specific house as an investment, they're gonna most likely go off of, right, their parents' opinion. But when it comes down to you building actual intuition about what it is that you're doing and actual understanding, then you begin to develop your own eye for value. You become your own individual and your own trader. And I think that's the goal. You never always want to have to rely on something, right, to trade. You want to be self-sufficient. And if that's the goal, that's exactly what we're here to empower you to do. We don't sell stock alerts. It's none of that. We don't trade for other people. So please understand that it's, you need to make sure that you become your own trader. We're all wired in different ways, and there's not one trading strategy that's going to work for everyone. And if you're a problem solver, then I think that you can do very well in this market. But if you're someone that needs to, be like, have their hand held throughout the entire process, and that's kind of your approach, in my experience, I don't think that's going to be a very effective approach in this market. So let's go ahead and get right to it. For those that love to ask, I'm using the TD Ameritrade Thinkorswim platform. It's the platform that I use. It's not one that you have to use. And yeah, I'm going to go ahead and show you this. I have no open positions. People since my swing trade that I ended up closing on Thursday continue to ask me if I'm going to swing trade something over the weekend. Just so you guys can see, I have no open positions. I'm not swing trading anything, but I'm really excited to trade with the Learn Plan Profit Group as soon as tomorrow morning. I might even do a pre-market trading session depending on how the market is opening. So let's go ahead, and I do apologize. I think it was like there we go. John Peters, you said VFF support resistance. Okay. So let's go ahead and break that one down. Every stock that I break down, I'm going to have on the left-hand side. So let's go ahead and get started with this. I'm going to do an analysis on the 180-day chart. So we're going to go here, 180-day chart. So again, I want to make sure that you guys understand that this is based off of my opinion, and I hope that you can just take it just as that. This is just my 2 cents. So I see why it is that this thing was showing signs of very consistent uptrend. This is something that we've talked about a lot when it comes down to technical analysis on the larger time frames. The SMA line, which is the simple moving average, tends to have a pretty good kind of like indication of the direction of how that specific stock is or ETF is trading. When the overall pattern, and keeping it super simple, when it was showing signs of an uptrend, the SMA line was, if you were to put an arrow in it, was pushing up, right? It's indicating signs of an uptrend. And once it begins to no longer make higher highs, and you can see that it peaked out here, it pulled back, it didn't go as high as it did before. And some of you guys might be like, well, why is that important? Again, the whole point of this is to buy something to be able to sell it for a profit. And if you see that it's no longer making higher highs and that it sells off and it's actually making lower lows and it's beginning to consolidate, look at this SMA line. It's no longer pointing up, right? It's, in a sense, if you were to put an arrow at it, it's almost showing signs. It's kind of in that consolidation phase, right? So it's building a support right around this $12 area and building a resistance right around the $14 area. It doesn't mean that you can't make money off of it. All I want you to understand is there's usually 3 stages of a reversal: the sell-off, the consolidation, and the confirmation. There's usually 3 stages of, when something peaks out. And that's, the confirmation as it's showing signs of an uptrend, the consolidation when it doesn't make lower lows or lower highs, it kind of just flatlines, and then right after it does that, it sometimes breaks its pattern and then begins to sell off. So again, it does pretty much the exact opposite of what the 3 stages of a reversal. This one's just uptrending first, then consolidates, and then gets rejected. So as of right now, I would just be like, okay, the very core principle, and this is my opinion, right, and my approach. But doesn't it make sense that if you want to make money in the stock market, that if you're someone that's struggling to grow your account, that you can do one simple little thing and just simply focus on stocks that are showing signs of growth. There's obviously yes, you can make money on penny stocks and OTC stocks and all those lower cap stocks, and usually those larger, those penny stocks have descending patterns, big picture, and because of those descending patterns, they add a huge form of risk, right? Doesn't it make much more sense that if you're someone that's struggling to stay green, to simply avoid all of that, right? Because you're struggling to enter and exit within a short period of time, and it takes practice, right? It doesn't mean that it's impossible. It just takes practice and understanding. And why run first when you first need to learn how to walk? And that's again that concept and that mindset. If you're struggling to grow your account, then maybe you can just do that one simple step of focusing on getting something for a good deal, but that the overall direction is in your favor. So showing signs of an uptrend. So how would that look like? Well, when VFF around this period, it was validating the EMA line as a support, and it continuously made higher highs and higher lows. So every time that it peaked out, it pulled back, would consolidate at the EMA line, and then it would make higher highs. It would push up. Look at this. Peak out, pull back, go, make higher highs. Same thing. Push up, pull back, consolidate, and then make higher highs. So there's this pattern there. This is kind of catching it as or right before it might begin to sell off. So I'm going to set 2 alerts. I'm sorry for the long breakdown. I just wanted to kind of start it off with a very clear understanding of maybe for those that are struggling to grow your account, you can do one very simple little step and just avoid stocks that are showing signs of a descending pattern. If you're struggling to manage your risk, if you're struggling to know when to buy, know when to sell, how to identify a good pattern, how to identify a good deal, then first of all, you should probably educate yourself a little bit more on that and practice. So on-demand trading, paper trading. But one of the other things that you can do is maybe be a little bit more selective with the stocks you choose or might want to continue to trade. That's just my 2 cents. Just take it as that, and we can kind of go from there. Here we go. Let's see, Ignacio is saying Costco. So CSCO. I appreciate you, Ignacio, for tuning in to the live stream. Hope you're having an amazing Sunday. As of right now, okay, so this is going to be a very similar pattern. So I see why it is that this one's being called out. The MACD looks decent in the sense that it might try to find a support here. I just want to point out another very simple concept that we try to remind people within Learn, Plan, Profit, and it's you want to make sure that you get something for a good deal, which then you can later sell for a profit. If someone's selling like an iPhone X, market value of anywhere from like $700 to $1,000. If someone's selling it, family members are saying, let's say you're an investor of phones, right? Someone's selling it, be like, yeah, I'll sell it to you for $10. You would jump on that all day, right? Because you know the market value, you understand the market, you understand keyword, and you know that you can sell it for a profit. So when I ask you for CSCO, is this the best deal that you can get? These charts might not make sense to you. Don't think about it that way. Just think about the very principle of, are you getting a good deal, right? The price. Look where it's trading at right now, and not the patterns, not the direction, not that it's trending below the EMA line, nothing like that. Not that the RSI again was overbought and barely began to descend. That the MACD is not complete. None of that. But just it's at $54.75. That's where it closed at. This is where it was at. About a couple of weeks ago. Right around that $52, right, twice. So you can see, this is on the technical standpoint, you can see that, right? This is where it was at, this is where it bounced at, and these were the high points, right? So can't you do your part in, okay, I'm a deal hunter. When it comes down to investing in real estate, if you're a true real estate investor, you're not buying every house that has a for sale sign. Who cares? It doesn't matter, it's irrelevant to you. You have criteria, you have margin of profit that every stock, that every house has to meet before you choose to invest your hard-earned money. How are stocks any different? How are investing in phones any different? How are investing in cars any different? It's not. It's the very principle of getting something for a good deal. And what can you do? You can wait for that good deal to present itself. One of the concepts that we covered last week in the Learn, Plan, Profit group is so many people focus on trying to chase the stock and hoping that stock performs the way that they want it to. Why not allow the patterns and the setup to come to you? Why not just be such a much more relaxed trader? And when that setup comes, cool, take advantage of it. But until then, you're just like, no. As like a hedge fund manager, right? You're just like, no, I'm not going to trade that, right? Because I have other people's money that I'm trading. I don't, right? That's not what I'm saying. But I'm saying that if you were to, if you watching this right now, if you were to be a hedge fund manager, just imagine your family's life savings. Let's say they gave you $100,000. That's all your parents have worked for. Again, more or less, regardless of what it is, it's a concept, so don't get mad at the figure. But let's say they gave you $100,000. They're like, hey, we worked our entire lives for this. I want to, I trust you. Grow it for me. Would you be as free to take any position? Would you buy Costco right now? You might do it because it's your money, right? If you had $10,000 to your name and you're like, well, yeah, it looks somewhat like a good deal. But now let's say you have 10 other family members that just gave you $100,000. You're trading with $1 million. Would you be so willing to take that position right now? No, because there's so much more pressure on your shoulder. You almost have to you have someone else pretty much relying on you, right? So wouldn't it make sense then, based off of this simple technical analysis? First of all, the SMA line is flatlining, so it normally does this, right? It's consolidating, so it's no longer making higher highs like it was. It's consolidating, so this is usually what happens before a rejection. Usually patterns tend to repeat themselves. They don't have to. It's selling off right now. There's no indication of a confirmation. Yes, it's trying to find a support, but again, it still has margin to give off of. So if you're trading with $1 million and it still has a potential margin based off of previous patterns, and we don't even know if it's going to bounce there, but it still has about a little bit more than 5% to give off. Would you still be so willing to take that position right now? Not just because it's your money, but if you were trading with other people's money. Think about it. It's a very simple concept, again, in focusing that you wait for a good deal, you wait for a good setup, you wait for the confirmation of an uptrend, and again, keeping it super simple, a good deal, confirmation, and making sure that the margin of profit is worth it. It's the very simple things in life that I think a lot of people overlook, and I'm sorry that I'm getting really in depth with kind of just these concepts. I just want to make sure that we have an absolute killer week. And I believe in you guys, but it's not what I believe in. It's making sure that you guys are implementing strategies and best practices that align with your goal. If you guys want to do this 5 or 10 years down the road with much more money, then what best practices and habits are you implementing today that's going to get you there? Is taking a position every single day just because you can something that's really gonna, get you there? No, probably not, right? So let's go ahead and move on to the next one. So real quick, I'll break this one down. I'm going to set an alert. I think that this thing still has a little bit more margin to sell off. That's my opinion. I'm going to set another alert if this thing approaches that previous support, right? So you can see that. And I'm also going to set an alert if this thing begins to make higher highs. As you know, it 100% can, but I'm not going to just take a position just because it can. So here we go. So Alex is ZM. What is that? Oh, just ZM. Okay. Thank you again for tuning in. Okay, so it looks like Zoom video. Okay, so we don't even have 180 days of patterns to go off of. Keeping it super simple, and I'm not, anything can happen, and I'm a true believer in that, but I'm not going to trade off of that. I'm trading right now with $100,000, and that's a lot of money for me. I'm still building my confidence, right? Trading with $100,000 as I previously was trading with $25,000 for quite a while. And I'm trying to scale my trading. I've been doing very well, thankfully, right? But when I dump $100,000 onto ZM with the price point that it has right now and hope that it continues to uptrend, no. Guys, you don't make money based off of hope. There's always this form of risk management. And as a deal hunter, look at previous patterns. The past week, it's pushed up this much. Great. Now look at it. It's overbought. It's overextended. It's not a good deal. Yes, it can continue to uptrend, but I don't know anything about this company. Yeah, I can do a little bit more fundamental analysis, look a little bit more into the company and what caused this spike up, but I'm a technical trader, and based on this technicals, it's overbought, overextended. I'll set my alert, or we already did, but based off of this pattern and based off of how it was trading before, I think that it's going to pull back. I think that it'll pull back around this general area, $80, if this uptrend pattern overall continues, but I still think that, with the core principle of getting something for a good deal, ZM does not meet that criteria. So again, I would simply not trade it. I'm going to set my series of alerts here. We set it both above and below, and then we can simply follow up with it. So and I'll set my alert if this thing gets rejected here. I'd love to follow up with it, and I follow up with all the stocks that you guys break down. I just want to make sure that we do our part as traders, right, and investors, that we wait for that confirmation. So here we go. CHRS. What's going on, Griffin? Appreciate you tuning in. Alrighty. What do you guys think about this one? All right. So let's break this one down. What do you guys think? I want you guys to help me break this one down. First of all, it's a bioscience. I'm not a huge fan of those, but just because I'm not means nothing to you, right? I've just had bad experiences with bioscience, pharmaceutical, and marijuana companies, but that's just based off my experience. So people are saying based off of the RSI a little bit more on the overextended side, right? The MACD is a little bit more on the overextended side. I would agree on that. What else? Some good things, some bad things. Feel free to share your honest kind of like 2 cents. If you were to say one comment about CHRS, what would it be? Bullish, I agree, right? So it's been trending above the SMA line. It's been showing signs of an uptrend, been making higher highs. It just recently hit highs of 21.18. And based off previous patterns, it does normally, based off previous patterns tend to repeat themselves. They don't have to. And that's why we manage our risk, and that's why we wait for confirmation. But patterns tend to repeat themselves. It has previously bounced at the SMA line, and it's showing signs. It was showing signs of a descending pattern getting rejected by this EMA line, which is the blue line. It broke above it, and it looks like it's trying to make higher highs, right? And continue this uptrend, continue this flow. So one thing that I'll look at is, kind of simply what we just said, kind of go with the flow. If this thing continues to increase in value and show signs of an uptrend based off previous patterns, right? It makes sense. Like this could be something that as it approaches previous resistance that, hey, the margin of profit isn't bad. We can day trade it as it continues to push up. And if the direction is trading between the middle and top VWAP intraday and it continues to push up, then again, we're deal hunters. We can still focus on the low points, the high points, getting in, getting out, locking in profits. And as long as the overall direction is in our favor, as long as the margin of profit is still worth it, then great, there's criteria that's being met. But if we just go in and hope that it just continues to uptrend and dump all of our money in it, is that really the best habits that you can implement to your trading, approach? Maybe not, right? So again, confirmation is key, and just as much as it could go up, it could go down. So I'm going to set my alert if it breaks below the EMA line, and then we can simply follow up with it. But I like the direction on this, right? It's been showing signs of an uptrend pattern. It's above the SMA line. SMA line is still pointing up, and it's showing that it can potentially continue to uptrend. But I do want to point out the RSI, a little bit on the overextended side, and so is the MACD. But again, those are just indicators. So here we go. FD Solar is oil D. All right, so we have an ETF here. All right. Oil D. So what do you guys think about this one? Oil D. Can you guys help me break this one down real quick? Oil D. It was showing signs of a consistent descending pattern. It's pushed up. It almost looks like it's been consolidating, right? Almost like a peak formation, right? It's been almost peaking out, so we could see that based off previous patterns, it's almost like a double top. It looks like this normally can, be something right before it sells off. I think you guys are right. 3 stages of a reversal, and there's 3 stages of when something peaks, right? It shows signs of an uptrend, it hits a resistance, it no longer makes higher highs, and then the rejection phase happens, right? 3 stages of a peak formation, 3 stages of a confirmation or of a reversal. So I think that's great that you guys pointed that out. I think that's very obvious, right? So now what we can do is, again, like we said, it doesn't mean you can't make money off of as something consolidates. I'm a huge fan of horizontal patterns, right? Identifying low points, high points, being able to buy the lows, sell the highs. But confirmation is key, so we can simply set alerts and wait for that. But just as much as it could go up, it could go down. So there's always a form of risk management that you want to have set up. And I think if you're a beginner, if this is the first video that you have ever watched of me, and speaking based off of experience, I think one of the most difficult parts in my experience that I've made mistakes on is managing my risk. And I think a lot of beginner traders, they focus so much on the offense and not enough on the defense. Remember, the only way that you can continuously grow your account is if you can control how much money you give back. Think about it. I don't care if you make $100,000 in one day. If you can't manage a risk, the next day or the days that follow, you can give it all back. The purpose of trading in the stock market and investing in stocks is to continuously grow your account, right? So make sure that just as much as you focus on the offense of, confirmation, margin of profit, all that good stuff, locking in profits, that you focus on the defense. And this is still something that I'm refining every single day. I've been doing this for years, and as I scale my trading, it's something that I've been struggling with. And I've talked about it. One of my biggest struggles scaling to trading with $100,000 is managing my risk. And there's nothing wrong with having a struggle or an area of opportunity. It just means that I just have to work on refining and getting a little bit better day after day, month after month, year after year. And I think that's one of the most beautiful things that I enjoy about the stock market is like you're always learning and you're always working on getting better. There's no such thing as a perfect trader, but it's working towards becoming as close to perfect as you can. And I think that's the goal for everyone. So let's go ahead and move on to the next one. I'm going to go ahead and set my alerts, and then we can kind of go from there. So here we go. MRNO. Thank you again for tuning in. MRNO. Here we go. Oh, doesn't look like it popped up. On to the next one. Here we go. TNDM. What's going on, Mike? TNDM. Here we go. All right, so it looks like we're catching a lot of stocks today that are in the consolidation phase. So this should be something that you should be extremely careful with, at least with managing your risk. Because again, this is normally what happens before something begins to sell off. So you could see that it's been consolidating around this area. The SMA line is no longer pointing up. It's kind of just flatlining. There's nothing wrong with that, but just know that it can begin to sell off, and it's not really uptrending anymore. It's just consolidating. So you might want to be a little bit more selective with your entry points and also confirmation. It had a huge red day on Friday, lost about 8%, and the margin of profit for recovery, it's about 8 to 9%, depending on where you buy and where you sell. I would be selective. This looks more like a day trade than rather a swing trade because of the consolidation phase. If this thing begins to trade in between the middle and top view up and then just shows signs of a very consistent uptrend pattern, the margin of profit is worth it. The pattern is there, and you are managing your risk accordingly. I can definitely see why TNDM can be a day trading opportunity if it confirms that uptrend. So thank you again for that, for bringing that one to our attention. Here we go. So we got Apple from Ignacio. Alrighty. So I'm not going to break this one down too heavily. It was showing signs of an uptrend. The overall SMA line was acting as a support. It sold off. It broke that pattern, right? The SMA line, this is a very common pattern. Old supports become new resistance levels. So as this thing sold off and tried to recover, it now is consolidating around the SMA line. So until it confirms an uptrend, I would validate this area as a critical point, and it's most likely at a resistance more than a support until proven otherwise. So I will set my alert here and kind of follow up with it. I just want to remind you that for those that are getting their ticker symbols deleted, all we ask you to do is if you want me to break down your stock, that you put it in the ticker callout format. I'm only going to break down your stock if you already have done your own due diligence. If you have not, I'm not here to tell you, what my thoughts are, because I don't want to, again, like mold your opinion. If you don't have an opinion yet, then that's the first thing that you should work on. And again, I know it's annoying, but come on, guys. If you guys are trying to make money, put in the work, right? Put in the effort. So here we go, Shane. So Shane, I think, called out JNUG. Here we go. So we got JNUG in the house. Woo-woo. Alrighty, so this one's kind of all over the place. I know that it was fluctuating a lot just due to gold and how it's been performing since this is a gold-based ETF. So I'd keep a very close eye on /GC. Again, if you're on the TD Ameritrade platform, that's how you find it. That's the gold-based future. If you're on another platform, you'll probably have to find it. It has a different ticker symbol. But one thing that we could see right now is that, based off of how it's been trending or trading, it pushes up, peaks out, consolidates, breaks below the EMA line, catches a support around the SMA line. So this is, again, most likely what it's going to try to do. Look at the MACD, look at the RSI. It's in the very beginning stages of pulling back. Right now, it looks like a pullback, but based off of last time, it consolidated for some time around the EMA line before it broke below. So this means that maybe we just want to be a little bit more selective to either wait for confirmation or wait for this thing to break below the EMA line, build. Again, this is something that we talk a lot about within Learn, Plan, Profit, is the more patient. Just imagine, for all those that tried to buy, right? For those that bought here because it was consolidating around the EMA line, right? So just think about this. For those that were buying here around the EMA line to try to sell it for a profit, right? Let's say they ended up selling it here at $9.50. Great, they still made 10.5%, right? But just think